What's going on, guys? Today we're going to be talking about how to know when to sell a stock. And as you may know, it's nearly impossible to predict the exact bottom and top of a stock price, but there are ways to work around it, and there are different metrics we can use to get a pretty good range or a pretty good idea of where the top and the bottom will be. And I'm going to show you two examples that I've had with two different stocks, Meta Platforms and Tesla, in the last 5 years or so, where you can kind of look back and say, okay, if I would have done it like this, it would have turned out better. So the first thing is going to be looking at the PE ratio, because if you look at a stock that, let's say, in a hot bull market, the stock will trade at 50 times earnings, and then in a bear market, let's say it goes down to 25 times earnings. Well, and let's say on average, it'll trade somewhere in between, right? Let's say it trades at 35 times or something like that on average. Well, then you can kind of use that as a baseline to say, okay, well, if the stock is at 50 times earnings right now, then that means it's most likely going to be on the overvalued side of things, and there's a good chance it's going to come down. That's one way to look at it. The other thing is, let's say, for example, a company like Meta Platforms, which in the past, I've been buying this stock since probably 2018 or so, and I've made money along the way, but there were plenty of opportunities where I could have made a lot of money if I would have held on to the shares longer. And so one example of that is when I was buying the stock, probably this is years ago, at roughly $140, $150 a share or so. And I held it all the way until it went to well over $300 a share, $350 a share or so. And I didn't sell any of my shares because I said, okay, I am bullish on Meta long term. I think it's going to keep going and there's nothing to worry about. Well, what happened in 2022, I believe it was when we had a giant bear market that lasted quite a while, and the stock went all the way back down to where it was trading at years ago, to where I could have bought the shares at the same price I bought them years prior. And if I would have sold just a couple, even if it was 10%, 20% of my shares, then I could have made a lot. I would have made over 100%, 150% gains on those shares. And then the stock fell and I could have bought those shares back. Now, again, it doesn't mean you're going to time it perfectly and sell out of your whole position at the very top and then buy it back at the bottom. That's not very realistic. What is realistic is when I'm up 150% on my shares and the P ratio has ran up quite a bit over, let's say, a decent amount of time, let's say at least a year, let's say 2 years or so, then that means it's probably a good idea to sell at least 10%. If not, sell 30%, or if you're really confident that it's going to come down, sell at least 50%, right? You got to find what range is healthy for, is comfortable with you and what you think is really going to happen as far as the valuation goes. But that's one example with Meta Platforms. The other side of things is a stock like Tesla, where it's the same thing with Tesla. I've made a lot of money with Tesla. I've been buying the stock since 2018 or 2019 or so. And again, even though I made a lot of money and I've had lots of gains with it, I could have made a lot more money if I would have done things slightly different. So Tesla, there's a couple, I've bought and sold this stock multiple times over the last 5 years, but I would say this year is a good example where I was too aggressive with my selling, because when I was selling out I think I was selling at 250, 260, 270. Now this time I was selling my shares a little bit slower. That I did do a little bit better with that this time around with Tesla, but I still was too aggressive because I sold a good amount of shares when it was still, $250 to $270 a share. And now what is the stock price? $370 a share. So I missed out on a good amount of money. And again, you can't time it perfectly, but what I should have, looking back, I should have been less aggressive and held on to more shares. And that's another way where you pretty much got to be safe on both sides. Whether the market goes down, you have to be comfortable with saying, okay, I'm okay if the market falls, because I already sold shares at a big value, a hot valuation, let's say, and now that the stock has come down, that's okay with me because now I can buy back shares and my position is not too big. And so I'm okay with buying more, and it's not like I missed out on the bull run because I actually sold some along the way. That's one way to do it. And then you also have to be okay with the other side, where if the stock goes up like crazy and you sold out halfway, well, then you have to hold on to some shares to where even if you, let's say you start selling at $200 a share and it goes to $300 a share, you need to sell just a fraction of your shares at 200. Even if you think it's pretty overvalued or it's getting to that valuation, sell a fraction of it so that way you still have some shares left so that when it runs to $300 a share, you still can, then you sell it at 300. And then, let's say it goes to 400 after that. Well, maybe hold on to, again, don't sell all your shares at 300. Sell a third of them at 200, a third at 300, and a third at 400, something like that. Now, if you're dealing with a really hot growth stock, like let's say Tesla, I bought Tesla when it was at a $30 billion valuation. So in the end, I ended up selling some shares for at least a 15x on my money. I think there was even a point when I was up 2,000% and it was near a 20x on some of those shares. But the situation here is that it's kind of tough when, let's say when I tripled or quadrupled my money on Tesla back in the day, probably 2020, I didn't look at that and say, okay, I'm going to sell out right now, because I knew that even though Tesla had went from a $30 billion company to a $100 billion company, I knew that it had more potential, that I knew it could get into the hundreds of billions at least. And so I had a further out price target. So that's where it gets tricky, is because then it's very hard to predict. If you're dealing with a growth stock, it's very hard to predict, is your stock going to triple or is it going to have a 20x like Tesla did? So that's very hard to judge. And that's where again, you got to be careful and you got to take it slow. You don't want to sell too many shares too quickly, because then, like in the case of Tesla, there's people who sold when Tesla was a $100 billion company, let's say, and now it's over $1 trillion. So that's my philosophy on when to sell a stock. Thank you for watching, and I will see you in the next video.